Hello, everybody. Welcome. As some of you know, last night in my video with Dennis, we talked about being aggressive versus being conservative. And I think the most critical thing for you to do as a trader is to find what works for you. Find what makes you comfortable trading. I was in Cliff this morning, and honestly, to tell you the truth, I didn't see this move up. But for me, it doesn't matter because I'm trading off of the 5-minute. I got in here, I got nervous here, but it didn't close below the 5-minute high. And I think I got out somewhere in here. I left some on the table, but I made a double. So you need to figure out what works for you as a trader. Otherwise, you're just going to stumble around and end up losing money. Last night, Dennis mentioned no real triggers for the market. So I want to take a look at Dennis's charts. And if you recall, Dennis trades on either the hourly chart or the daily chart. So let's look at hourly chart. And I want to bring up Dennis's indicators. Dennis Prost. So if we look closely at this, this is the hourly chart of the SPY. And if you notice, here's a trigger here, the MACD crossed. Here is a trigger here. The 8 is crossing, or the 4 SMA is crossing the 8 SMA. Here's a trigger. The parabolic SARs are below. And then finally, here is another trigger. The 4 crosses the 34 and the 8 crosses the 34. So based on this hourly chart, I believe he's in meaning long. If I look at the daily, you know, the SARs are still below. We haven't crossed. The MACD hasn't crossed. So on a daily stance, he hasn't gotten a trigger to go long. But like I said, Dennis is ultra conservative. Dennis waits for these 3 out of 4 triggers before he gets in. I, on the other hand, and Alan, on the other hand, basically trade on the 5-minute chart, and we get in the morning and we get out. I don't hold overnight. I know Alan at times does. I don't know if he's holding some positions overnight, but let's see what Alan's doing. What did Alan trade today? I know he made a post about XOM, maybe.
Yes, I was in XOM today and US Steel.
So yeah.
So XOM was triggered by the 5-minute app. You could have got into the calls that I posted at $20 a contract, and at the end of the day, you could have been out at roughly, I think the last one I saw was $1.20 a contract. So with that, you were in pretty quick. I think there it is right there. So it was pretty early, 9:40, 10 minutes in, you were already in that trade.
Right.
You would have been in the 56 calls, could have got them for $20 a contract and sold them for, I think it's $1.20 a contract.
Let's talk about that, because I know some people ask, you know, what expiration do I get in? What strike do I get in? Let me bring up the 5-minute. Style today, 5-minute.
So trade is out of the money. I don't trade in the money usually. I have done it. If I can watch and sit and watch a trade, I'll do. Sometimes I've done 10 contracts at $1,000 or something. I don't like to get I don't like to do it too much. If I'm doing for end of the day, really depends on the day. If you're going in Wednesday or Thursday, the out of the money works really well because they're so cheap.
And look at look at that chart of and let me get rid of this daily one.
And that's the chart you want to look at, that where it just took off and it was beautiful.
So here we open up at just under 56. So out of the money would either be the 56 or 57 calls.
And either one of those would have been a great position. 56 is the one I would have gone in.
So let's look at the 56. So this is the 5-minute chart of the 56 calls. So it triggered here at 8:40.
Mm-hmm.
So 8:40, those calls were going for at most 50 cents, let's say. And they traded all the way up to $1.30. So that was at least a double right there.
Mm-hmm.
And when you traded, did you use time frames, or how did you exit your position?
I did use time frames. In this particular case, it would have been 12 o'clock your time.
Okay. 1 o'clock. So the time frames are like,
It was close to the high. So key times 10 and 11. The 10 o'clock really didn't have the reversal like it did yesterday. And so you would have permission to stay into 11.
and are those times Eastern?
Yes, Eastern.
Okay. So 9 here, 10 here. You know what I should do is just change my time frames to Eastern. I'm getting close to that. So here's the 11 o'clock, and yeah, there's no real close below a prior low. I mean, you did have a little bit of heat right here where the close was below at 10:15. But yeah.
So that's a good example. Go back to the 10 o'clock there. Because normally that's where you would have got out.
9 o'clock.
Yeah. So what you do is at 9 o'clock, you draw a line. Yeah, you go to the 10 o'clock bar. Go to the 10 o'clock bar you did on the left.
Okay, this bar.
Yeah.
And draw on the low.
Well, it depends. If you want to, you can draw a parallel line there. You follow me?
Right.
You would have never, and then you would have put your stop below that line.
And and this gets into being aggressive versus being conservative. A conservative person might have said, you know what, there's a close below the prior low, I'm getting out. An aggressive person,
it didn't close below it. You never had permission to get out. So then if you go on to the next thing, now the next stop is 11.
Okay.
Which would be 12 on your terms.
10 on my terms. I'm behind. So here's the next level. Yeah.
You never had permission. Then you go to the next hour.
At 11. So there's the next low. Yeah.
You didn't have permission there. Then you go to the next hour.
Yeah, and that's the cool thing about the app is that it allows you to basically not have to sit in front of a screen and watch.
Right.
You just kind of get a trigger to go in, and then you basically check in at key times. Today I tried to do that with Cliff. I felt a little heat at 9:30 or 10:30 Eastern, but said, you know what, I'm gonna try to manage. And I think I lasted until 11 a.m. I think is when I got out. 10:08. Yeah, 11:08. So
Yeah.
But yeah, that's quite interesting.
Yeah, I learned that from Nicholas Darvis. Let's see here.
And there's anybody know what Nicholas Darvis did? Because he wasn't a stock trader. Well, professionally, he was not a stock trader. I used to know.
He was a salesman.
Yeah, but what did he sell? Did he
I thought he sold vacuums.
vacuums?
But I thought he sold. I'll pull it out for the next video, but he came up with this theory called the boxcar trading method. And so what he did is he went ahead and he would start a stock at 60, and then as long as it didn't drop below 60, he would hang on to it. And then if it went to 62, then that would be his new window, his bottom window. So then his next boxcar was 63 to 64. And so he was constantly bringing it up and then bringing it back down.
Right. And these were, and this was back in the 50s, I think. This was before you could sit there and watch the stock tickers. You basically looked at the paper at the end of the night and saw the stock results. And basically, yeah, he like he said, he drew boxes. If it went below the box, he had told his broker, put a stop there. And if it went above the box, he basically told the broker, buy it here, kind of thing. So
and the story is he became a millionaire doing it.
Right, exactly. Yeah. So
well, excellent. I hope that they got in on that. So let me talk just a minute on what happened in the markets. I was expecting a bounce off the 200-day. We were very, very close. When we were down 900 points that day, we were within 200 points of that 200-point drop. Not sure why, but the market dictates what the market does. The indicator was when we were down 900 points and we finished the day at 600 points, it told you the bounce was off of that number. Didn't go any further. It would have stayed at 900 points and dropped another 200 the next day. When it was at 900 points down and it bounced 300 points off, that was the number it was going to bounce off of. Then the next day it went up, and then we had to follow through today. Personally, I think we go up another 400 or 500 points tomorrow. Now we'll see. That's the beauty of the market. You never know what's going to happen, but that's the pattern. All I can do is tell you the pattern.
Right. Yeah. I'm just putting moving averages on this. See where we bounced actually. There's the 100-day.
Oh, is that where we hit on the 900-point drop?
Yeah, on the daily. We dropped through the 100-day.
See, I said that it was probably 150-point, 150-day. There. I bet you could figure out what that was. You follow me?
Yeah, where it actually.
Yeah. What was that? What was that on a moving average? You'd have to figure that out. I'm thinking it's halfway between 100 and 200.
Well, let's see here.
What fascinated me the most is the stocks that traveled the most down was the Jewish stocks, and that's why I showed it in my post. And the fact is that that Jewish traders came back and they decided that it wasn't low enough to buy in. Their rule did not allow them to buy in, and so they stayed out. What was that amount?
120-day.
Yeah, I figured it had to be an even number. It had to be something like that. So maybe we need to put the 120-day on our chart. It's amazing because I knew it would be something like that, but someone decided instead of 200-day, 120, And then that's when they did it. If you look at your charts, you haven't seen it drop to 120 in a long time.
Yeah.
Yeah, I'm gonna run here, Brian. So
Okay. Well,
enjoy
thank you.
everybody. Good trading day tomorrow. Make a lot of cash.
Right, exactly. Thank you,
Yeah.
Alan.
All right, we'll talk to you soon.
Sounds good. Have a good night.